Hey guys, what's up? Welcome back to RoyalBluFX. Today we're going to talk about what a Chotch is, or is famously known as a change of character, which I'm going to let you guys know what that means later down in this video. But we're going to talk about what the Chotch is and what it does and how to use it exactly. And it's pretty effective in the market. So without any further ado, let's start. Okay, so a Chotch is spelled this way. This is a Chotch, right? But what does a Chotch stand for? Again, it just means change of character, like that. Okay, and now we have to ask ourselves, well, what is a change of character, right? That's very, change of character is really just a change of direction. So we'll just say change of direction. And that's specifically talking about the markets, right? Obviously. So if we're wondering what a change of Chotch looks like, I'm going to show you guys here. So a Chotch is simply just when the markets are either going up like this, right? And then the markets are breaking structure like this. This is known as a Chotch, a change of character. And price starts to trickle back up like this, up to an order block, and then you immediately take the trade when price is at this order block, right? So a change of character is really just an area where the markets change its direction for the first time. And this is the area where price changes direction for the first time, right here, right? So, and the same thing goes up when it's on a downtrend, when price is going on a downtrend, right? And you're seeing a smooth downtrend, price is breaking the first high right here. It's telling us the price here is strong, right? And then we're waiting for the market to come back to an order block like this to take price to shoot all the way back up like that. So that's what a Chotch is, or change of character. So I'm going to show you guys here on the live chart what it actually looks like in the live market, so you guys don't have to be confused. So here we go. All right, so as we see here, you can see when the market broke structure here, you wait for the markets to come all the way up to an order block, like so. And then once price gets up to this area here to your order block, what you're waiting for is a Chotch on the higher time frame. My higher time frame is the 4-hour. So we're looking at areas where price will break and change the market for the first time. If you follow the structure here, you can see that there's a low, there's a high, right? There's this another low, another high. You can see here that price ever so slightly broke this low right here, but that isn't indicated. That is not indicated as a Chotch. That's an indication of a liquidity grab, where the markets came over and took liquidity from these lows to push price even higher. So this is not a Chotch just yet. A Chotch has to be it has to be broken, or the market has to break. The market has excuse me, guys. The market has to break the lows first with a strong bearish candle, and this is, even though this candle is very strong and bearish, it hasn't really broken the lows of this. It has it's broken ever so slightly, right? And then price just took up from here and started going up. So you can see there's a low, there's a high, this is another low, this is another high. The high still stays the same. There's a low here, another high. So you can see in the behavior of the market, the price hasn't really changed its direction yet. It's still bullish here, right? But the way to know when the Chotch comes is to know when the last low, since we're in a downtrend here, we need to know when the last low is broken, and therefore you can see it clearly right here. This is considered as the Chotch right there on the higher time frame, right? So you might be asking yourself, well, you know, well, as you see right here, the market has touched an order block, right? So doesn't that mean as soon as the market touches the order block, we should take the sell automatically like this, and just go and start selling it? Well, no, not exactly, because, obviously not every order block is guaranteed to hold price like this, right? What we're trying to do here, when the market reaches the order block, we're trying to wait for the market to hold we're trying to wait to see if this order block here can hold the markets up here. And for that reason, we're looking for a Choch for the first break of structure to indicate to us, to let us know that the markets are still bearish, people, and the market still wants to go down, right? So once we identify the Choch, here's our low, here's our high, right? Now look at over here, up here. We had the first, this is the wick high here. If you stretch this trend line here, you can see that we're only breaking wicks, right? And you can also tell here that we have what's called double tops. Is a lot of you traders, non-smart money traders, concept traders know, as this is identified as double tops, right? Yeah, RoyalBluFX, we don't trade double tops. We just identify them as liquidity areas where markets are most likely to come and hit out liquidity. So what I normally do is put a trend line trend line up here to let, and with a dollar sign to let me know that this is money liquidity here for the markets to take out. As you see over here to the right, you can see clearly here there's a wick that broke and took out all this liquidity to start taking price down. Okay, so this is a good indication to tell us that prices aren't strong enough to carry up above this high here, and the markets have just started to bearishly move so ever so fast. And this is a great indication that markets are a downtrend, right? And the only reason is because we have a perfect Choch that happens here. So this to me tells me that the markets want to go down. So now what do we do? Well, when price breaks the first Choch, we don't automatically just wait for a break and retest right here, where a lot of the famous break and retest traders would trade, right? You can tell here that markets went down a little bit because there was break and retest traders. Let's go down here for a second. Look right here. You can tell here, this was a high, this was a low. Here's another high, and people automatically assume since it's a break and a retest, I'm going to sell here. But in fact, the markets are breaking above this break and retest, above this high here, right? And markets are now starting to push up. Where? To an order block. So now we need to be patient to wait for the market to get all the way up to an order block, and tap it. In fact, on our entry, on our lows, let's go back on the 4 hour. You can clearly tell that the market needs to push up now. And to which order block exactly? Well, I'm going to show you guys here. You can't see the order block here at all. I mean, you can probably say that this is an order block here, but what I like to do is scale down to lower time frames to find out where the last order block was. And it's actually highlighting it right here. There's our order block. So once the market touches this order block here, we can immediately take a sell, or either wait for another Choch once the market gets up there. So let's wait for the market to get up there. There we go. Price touches the order block. Now you can do one of two things. Since we have a Choch on the higher time frame, you can automatically put a sell limit or completely start selling this market here, right over here. And the reason for that is because the market already did a Choch on the higher time frame, which guarantees our trade for a sell down here. So you can either start taking a sell like this right away, or you can probably, and normally when you're taking a sell from here, I would normally take a sell at the close at this low here. See this, let me make this better actually, right here, right there. Oops, sorry, that's wrong. It's this one. You can take a sell right here. Okay, so you can do, you can obviously have your risk set up high, to this low of this range, right? And you're risking what, 705 pips, which is pretty bad. Obviously, we're looking at a Euro ZAR, which is a major currency, which means there's going to be a lot of liquidity in here. So you wouldn't want to do 705 pips, obviously, as a risk. You need to eliminate that as much as you can. But in all fairness, if this was an entry time frame of the 30-minute, then you can risk the whole range as your risk, or you can always do it slightly above, where if the market should ever go up against the range, it'll tap out it'll tap above the range a bit to maybe collect some liquidity from the highs, and then, oops, and then take price below. Take price below like this, right? So you can do it that way, or I like to normally start trading or placing my trades when prices are respecting the low of this zone here, this order block zone, and then I would take the trade, right? And you can also do what's called a, probably like 50% of the zone. So I would normally risk a 0.5% here, not a 1 whole percent, and I would just risk a 0.5% like this, and then immediately take action on this trade, right? So this is one way you could do it. You could just go on the 4-hour, wait for the Chotch, and then wait for the markets to come back to an order block up here, and then you can scale down, and then immediately take the sell, depending on your risk of appetite right over here, right? So another thing you do is also when the markets touch your order block, okay, you can wait for another Chotch from this market. You don't need to enter right away. You can wait for another Chotch before you take a sell. So here's another Chotch that happened, right? So you can tell here that there was a low, there was a high, there's a low, there's a high, there's a low, there's a high, right? Now the markets broke the Chotch. The markets broke the last low, I'm sorry. And now this is considered a change of character. Let's see how we would have been able to do this one. Here we go, right there. Okay, and it's more importantly, you just need to wait for the markets to come back up to an order block here. If it doesn't, well, no sweat, I would probably go on the 1 minute to enter actually, but I can't go on the lower time frames due to the due to the data, the market trading view will knock me out of this trade. So you can set a destination all the way down, right? We're still waiting for a Chotch here. Or let's play it on the 4-hour time frame. You can see clearly here how the markets are moving so fast based off of the first Chotch, right? There we go. So markets are coming back right here. All right, there we go. Price did mitigate. You can see that we had a Chotch right here on the higher time frame, right here. It's not even a Chotch now. It's considered a break of structure, just a BOS, because this is not our first break of structure. So this would be a BOS, a break of structure, and we would go and identify our order blocks right here. And then we would have looked for another sell when price got up to this level right here. But we would look for a sell when we're on the lower time frame. Let's go on the 30-minute, and you'll see that there's another Chotch that happens right here. Okay, look at this, low, high, low, high. If you see this right here, the markets aren't breaking, they're just wicking above, right? They're just wicking. There's no actual strong body candle that pushes above and breaks above this high. So now you can see that this low here, the market took a big dump right here, and it's still a sell, right? So now that price broke this, we consider this as a Chotch right here. This is our Chotch. And as you see, we had an order block sitting right up here. We also had another order block sitting right up here. So we had two areas to look for sells, right? I would take my chances on the first one, obviously. If not the first one, then I'll take my second one. But notice how big my risk is. It's not that big because, this is my risks. This is my risk area, the risk zone that I'm only taking. I'm not taking anything higher, like, something above like this, where average traders would do, put your risk all the way above this high and then look for a sell here. But now, as you see, look how big, look at your risk to reward. You're taking a 2.4% reward and you're risking 1%, which is still high, right? So normally I would just take it right at this range right here, and then still look to target this low right there, perhaps even lower, maybe to an order block all the way down here, and then have this as a potential target right there. So I'd be having two trades running. Okay, as you guys know, we do have another Chotch, or sorry, another break of structure, sorry, right there. Okay, so this we consider another break of structure right there. And prices obviously, once they break, the prices obviously go up to an order block. We had an area of interest here. We have another area of interest right here. This is the last up candle before the down move. So two areas, right, to look for sells. We would, like, as I mentioned, we would immediately look to sell once price breaks. And normally when price gets here, I would wait for the market for a candle to close right below here for the sell. So I don't have to start selling from this high, but rather sell when price closes below this range here. So we would look to target lower. We would look to target all these a little bit lower because my destination is actually this order block first, right there. Okay, so we'd have initiated another trade right there. Okay, I might have either been stopped out on this one right here, but still look to enter again based off of this market here. Let's go down on 30-minute and look to see if we can enter this trade again. So, okay, I would have been stopped out, so this would have been gone. Let's look for another entry. Okay, there is a Chotch that just happened over here. And now we're going to wait for the markets to pull back for the order block to be tapped right over here. Exactly, actually. And as you can see, there was our order block here. The market's tapped our order block. We would have entered this market again, right there. We would target the same lows. Okay, let's continue and then see if we'll hit our target from here. And right, let's see. Can we hit it? Can we hit it? Okay, we might have broken even on this one, or probably closed out some partials on this one. But just so you guys know, this is how Chotches are done, right? Very simple and easy. Let's look at other examples here. If you look at this area here, here's a break of structure that happened here. More importantly, it's considered a Chotch right there. Okay, on the higher time frame broke. So we're looking to identify our order block on the higher time frame right there. We're going to go all the way down on 30-minute now so you can see how the market looks and how we're going to be able to trade. So you could immediately take a sell here once the market has tapped the order block, right? But I don't advise that, because every time frame we go, every time we go on lower time frames, we need to wait for more Chotches. That's just the safest way to take a trade. I would not necessarily just take a sell here just because the market's broke structure here and now we're waiting for a pullback and now we're going to sell. No, I don't do that at all. I wait for the higher time frame structure to be broken, like so. Wait for the pullback. Wait for the market to touch an order block, and then we need to identify another Chotch. So let's look at this example here. Price is going at a higher high here, right? Higher highs, you see, right? And then price then breaks and takes a dump right here. And you see there was a low that was broken here. So this is considered the first change of character, which is our Chotch right there. Chotch right there. And then now we need to identify the order block on this lower time frame. And where can that order block be? Well, we have an area of interest here. Okay. We have another area of interest, right? Here's the pivot point that went up, and then it went down. So the order block should be somewhere inside this pivot point right here, perhaps. It'll be right there. Okay, so it would have ever so slightly touched it and then taken price down right there. So we would have been able to sell it as soon as price got up here, have our risk to reward maybe a little bit above the high because it's a very small risk, maybe go above just in case the market did ever come up against us and taking price down to take out liquidity over here. As you see, sellers sold here, sellers try to sell here. So there's another attempt of sellers trying to sell here, as you see. But if price ever came up to tag out this liquidity, then I would have been in trouble over here. So in all honesty, that would have been my actual execution of the trade, because we identified the Chotch on a lower time frames, and I would have had to hold this for a while. Let's see where my targets would have been on the 4-hour, which is our higher time frames. Let's look over here. So the first target we would have been targeting is this low right there. It's a very safe low. Okay, you can take all your money out there or whatever, cash out or whatever, or you can probably target other lows like over here. Like here's a low, right? You can target this low. You can also target this low right there. And look how the market would have played out. You would have taken partials right here. And then if you wanted the rest of your trades to run, you can just let them run to hit this low next, right? So this low would have met. You can pay yourself at this low now. Now you can pay yourself, right? And then next you can continue running your next trade or whatever. Your next, if you haven't closed everything out, you could have targeted this low and either take out partial or let the rest run or cash out, right? So look how amazing this is, the risk to reward. You would have had 78% reward and only risked 1%. That's huge. It's really big. So this is how you do Chotches, guys. Make sure you understand that, when we're on the higher time frames, okay, our higher time frames is our directional time frame. So if we're going up, and prices, let's say consolidating like this, right? And then finally price breaks above, the highs. This is considered the Chotch, the first change of character. We need to allow the markets to come back to an order block, okay? And then take price from here to go right back up. Now, when price gets to an order block, we need to go on a lower time frames. Since this is a 4-hour, I would say go to 30-minute or 15-minute, look for entry here, wait for another Chotch over here to have the hands of the market switch, okay? So once price does another Chotch like this, you wait for the Chotch, and then you're just going to take the buy and then target the next high like that. Very simple, very easy. It's one of my favorites to trade, the Chotches. I use them all the time for my trading, for all my trades. So make sure you check it out and let me know what you guys think. Other than that, and let me know, yeah, like I said, let me know what you guys think. If this is something you'd like, if you don't like it, if it works for you, if it doesn't work for you, let me know. And maybe ask to see if I would do any other videos based off the Chotch to make it more easier if I haven't explained it well in this video. So thank you guys for watching and have a good day.